Every day, trillions of dollars move through global stock markets. Most people experience this system through a glowing button on a phone. Buy. What happens next is one of the most complex financial processes humanity ever built. Seconds later, order executed. Exchanges, brokers, matching engines, clearing systems, settlement networks, custodians, regulators. A global machine designed to move trillions of dollars without collapsing under its own complexity. And most investors never see it. Tonight, we open the black box. Modern investing feels instant. You buy a stock, and seconds later, your portfolio updates. It feels like ownership has already changed hands. But technically, that's not entirely true, because what you're seeing is not final settlement. It's a promise. A coordinated chain of systems agreeing that a trade has occurred, while the actual movement of money and ownership still happens behind the scenes. When you buy a stock, you are not just purchasing a company. You are briefly entering one of the largest coordinated trust systems ever created by humans. And that hidden process exists for one reason: trust. Financial markets operate at impossible scale, millions of transactions every hour across continents. Without trust, the system breaks. So markets evolved layers of financial plumbing to guarantee one thing: if a trade happens, it must settle. The moment you press buy, your order leaves the app and enters the brokerage system. In the United States, India, Australia, the app is different. The gateway is different, but the destination is the same. But these apps are not the stock market itself. They are gateways, interfaces connected to something much larger. Their job is to take your order and route it toward an exchange. And this is where global finance becomes fascinating, because every country built its own market architecture. The United States operates through giants like the New York Stock Exchange and NASDAQ. India routes massive retail trading volumes through the NSE and BSE. Australia runs through the ASX, which pioneered some of the world's most innovative exchange infrastructure, particularly in electronic settlement and clearing. Different countries, different regulations, different scale, but underneath them all, the core idea is the same: buyers and sellers must meet. Inside the exchange lies the heart of the market, the matching engine. A machine designed for one purpose: matching buyers with sellers at extraordinary speed. At any given moment, millions of buyers and sellers are competing across the market. The matching engine continuously searches for compatible prices. The instant both sides align, the trade executes. In milliseconds, sometimes faster. And this is where speed became a weapon. Some trading firms spend hundreds of millions of dollars reducing execution time by microseconds. Because in high-frequency trading, being faster than everyone else by a fraction of a second can mean billions of dollars in advantage. But even a completed trade is meaningless if one side fails to deliver. Financial markets were not always digital. Decades ago, stock trading involved paper certificates, human runners, manual verification, physical settlement. And during periods of heavy market activity, the post-trade machinery struggled to survive. In the late 1960s, Wall Street faced what became known as the paperwork crisis. Trading volume exploded. Back offices couldn't keep up. Paper stock certificates piled up everywhere. Some firms literally ran out of space to store the paperwork. Trades failed, records broke, firms collapsed under operational chaos. For a brief moment, Wall Street faced a terrifying possibility: not a market crash, something even worse, a system failure. Because if ownership records fail, modern finance stops functioning. The market had evolved faster than its infrastructure, and finance learned a brutal lesson. Execution means nothing without settlement. To solve this problem, markets created something critical: clearing houses. The clearinghouse became the trusted middle layer between every buyer and seller. Instead of relying on strangers to trust each other directly, both sides trust the system. This changed everything. Once a trade is executed, the clearing infrastructure steps in and effectively says, "We guarantee this transaction." If the seller disappears, the system protects the buyer. If the buyer fails, the system protects the seller. The clearinghouse absorbs and manages risk across the entire market. And the scale of this transactional backbone is almost impossible to comprehend. DTCC, the clearing foundation of American markets, processed a record $11.8 trillion in a single day in 2025. Not a year, not a month, a single day. Silently, invisibly, without most people ever knowing it exists. The United States, India, and Australia each operate sophisticated clearing frameworks, different architecture, same mission: keep the market alive. But here is something most people miss about this market architecture. It is not neutral. The country that controls the clearing and settlement systems of global finance has extraordinary leverage over the world economy. When Russia was sanctioned after the Ukraine invasion, DTCC blocked Russian securities from the Bank of Russia and Ministry of Finance on March 3, 2022. It wasn't just about freezing assets, it was about cutting Russia off from the post-trade machinery that makes modern markets function. Access to global clearing systems is access to global capital. Lose that access, and you are effectively cut off from the financial world. That is how powerful this hidden system is. Here's the strange part. Even after your trade executes, you still may not officially own the shares yet. Because settlement takes time. The shares must move, the cash must move. For decades, settlement took 5 business days. Then 3, then 2. Each reduction represented years of infrastructure investment and regulatory reform, and the frontier beyond T+1 already exists. Blockchain-based trading platforms are capable of settling trades the moment they execute. T+0, instant settlement. But here is the problem. Instant settlement requires every participant to pre-fund their positions in full, locking up cash and securities before a single trade is placed. And it eliminates one of the most powerful efficiency tools in modern finance: netting. The ability to offset thousands of opposing trades against each other, settling only the difference. Lose netting, and the capital required to run global markets multiplies dramatically. Which is why the world's largest financial institutions are in no rush to get there. The future of settlement exists. It just comes with trade-offs nobody is ready to accept yet. Modern markets are now racing toward T+1, faster settlement, less systemic risk. Because the longer settlement takes, the greater the possibility something breaks in between. And in moments of market panic, those tiny delays can become systemic threats. What looks simple on your phone is actually one of the most sophisticated systems humanity ever built. A giant, invisible machine coordinating money, ownership, risk, trust, and information across the planet in near real time. Most people never think about it. They see a stock chart, a portfolio balance. But underneath those pixels, entire financial ecosystems are working silently to prevent chaos. Because without these systems, global investing at modern scale would be impossible. But this is only the first layer, because after the trade executes, another hidden process begins. Where are the shares actually stored? Who keeps track of ownership? What does it really mean to own a stock? And why do most investors technically not hold shares directly in their own name? In Part 2, we follow the trade deeper into the financial system, into custodians, depositories, street name ownership or nominee ownership, settlement risk, and the transactional backbone quietly holding together global markets worth hundreds of trillions of dollars. Because the deeper you go into modern finance, the less it feels like investing, and the more it feels like civilization running on invisible code.